Sup, bro? So this morning we finally had Group C YieldMax dividend announcement, and I made a video yesterday. And guys, everybody who watched that video, subscribed and commented, thank you very much. The response from the community was overwhelming. I am super grateful. So, bro, thanks for doing that. But now I wanted to do a quick follow-up and just compare our YieldMax tracker estimates and how they did against the actual dividends that they announced. So first of all, guys, again, smash the like button, subscribe to the channel. I really appreciate all the enthusiasm from the past video. So if you haven't subscribed yet, I'm going to be doing a lot more of these videos. So yeah, subscribe, follow the channel. Another thing, this video is not a financial advice. I'm doing it just for entertainment reasons and for my own, like, to judge how to invest and all of that good jazz. I'm not a financial advisor, so don't follow me. Okay, bro, let's begin. So this morning, YieldMax announced dividends for Group C, and I'm not going to go over the numbers. You probably have seen them already. And if you didn't, just go to their website and they will show you there. But what I did is I put together this small table, basically with my predictions right here, the low and the high end, okay? And also actual dividends over here by ticker. And here I added my midpoint algorithmic estimate. And I wanted to see if I beat or miss, or how did I do, how did my estimates do compared to the actual numbers. And so while most of my estimates were too optimistic, as you can see, the actual numbers missed by a lot for most of them, I analyzed the data, and there are a few findings that I want to share with you. And also I will be adjusting the algorithm based on the additional findings, and I will show that to you in this video and just kind of talk through it. Okay, so number one, let's start with Hoie. So this fund is brand new. It was just created last month, or just went public last month. And so they paid significantly more than my prediction. The midpoint was like 252, and they paid $3.30. And that's actually very close to their IV-based estimate. Okay, actually, no. Let's look over here. Yeah, so IV-based estimate was $3.38, and they paid very close to that. Okay, there's a couple of reasons for that, bro, and I want to talk about it just real quick. It's a new fund, and while they've lost a significant amount of money already, so last cycle they lost $5, and now today they made some trades and already lost another $309,000. So combined loss, that's about $11 and something cents. But the cycle has just begun, so I'm almost positive they will make up the difference. But they're sitting on a massive synthetic, unrealized synthetic gain, and their synthetic position is $49 right here. So they're sitting on $16 per share, per Hoie share of synthetic gain. All right, and they didn't realize it yet, but I'm sure they will. Well, I'm not sure, but most likely. And here's the thing about it: HOOY, which is the underlying. First of all, it's sitting at $65, and in the last couple of days it went as high as 67. Basically, there's a good chance it will be included in S&P 500 in the next reshuffling, and that's, I believe, is happening on June 6th, so just a couple of weeks away, not even, like maybe 10 days. And if that happens, most likely HOOY price will skyrocket, possibly into the 70s. And yeah, I had 73 call sold for June 6th, and today I rolled it to $90 because I just don't want to take that risk. Anyway, so most likely their synthetic gain will be even more massive than it is right now, and hopefully they make some money on the weekly trades going forward. Again, this is just the first day of the new cycle, and because it's a new fund, they wanted to kind of attract more investors, and they're feeling like, hey, we're sitting on such a massive synthetic gain, most likely we will win, so we can afford to pay a decent dividend, just a little bit more, or right around the IV, and we'll do all right. So that's how I think YieldMax managers went about it. Okay, so the big one is CONY, and we missed by about 20% on the dividend for CONY. Okay, so this is Misty. So CONY is a whole different story. The fund has been around for a long time, and while they did make $1.46 last cycle, so their IV estimate was 43 cents, but hey, look, they've made $1.46. They're sitting on synthetic gain. Coin is doing rather okay. And by the way, because the IV on Coinbase has dropped a little bit, so now the algorithm is calculating a lower estimate. So now it's 79 to 96 cents. And when I did the prediction, it was 83 cents to $1.01. Okay, so that went down a little bit, but that's quite all right. But basically, what the algorithm in its current form does not account for, and this is what I spent the last like 20 hours working on. So, bro, this is a new function that will be, number one, added to the algorithm, but it's also for your convenience and something that nobody talks about. So here is the rolling P&L. And you can basically, like, when you shuffle through the cycles, you can see they lost 126 million here, 101 million here, and then 245 million here. But, you know, it's kind of hard to keep track of all of that. But if you look at the rolling P&L, it's all over here, all kind of captured in one big table. And if we look, even with all the gains year to date, they still lost $2 per share on the trades, and that equates to almost $300 million. Okay, and so if I was a manager for CONY, I would also look at my like $2 loss, and like I gotta pay the dividend, but I have this loss from from the beginning of the year. And if you know, in the beginning of the year, CONY was a lot higher than it is today. Now it's under $9. And if we look over here, no, this is gonna look at CONY. So check this out. Where's the price chart? Right here, beginning of the year, January, right here, January 6th, it was $14. Okay, and now it's like below 9. So not only they lost money, and they had to pay out dividends, and so the price of the CONY dropped. And they're like, okay, the NAV has suffered tremendously, but we still have this loss to deal with. And so we're like, we don't know how the rest of the year will play out, so we'll play this safe right now, and we'll pay above the IV estimate, and we'll pay above the IV estimate significantly, and we'll pay more than the last dividend, and but still, we'll conserve half of this cash that we made last cycle for the future. Okay, and their P&L, synthetic P&L at the end of last cycle. So if we go to current cycle, it's now sitting at 55 cents, just 1 cent of earnings so far. But they're like in cash preservation mode, and this is true for most of these funds. Okay, and we can go through them one by one. But most of these funds, they have lost significant amount of money this year. And actually, I created this page where like you don't have to go into one individual stock after another to kind of get all the info. This basically puts it all in a table, summarizes it by group. And so if we go back to group C, and here we have the estimates for the next cycle. Okay, so declares on June 25. And so far, because the cycle just began, there's not enough info. As we get closer to it, it will get more kind of more accurate. At this point, we just don't know what's going to happen. But also, I have created the rolling P&L by group over here. And so you can see group C, except for NFLY and CVNY and MSFO, all of them lost money this year. And that's not cool. So they're kind of like, hey, what do we do about it? All right. Like even Misty, where's Misty? No, actually Misty is in the green for the year. Wow. They're almost on $4 of total P&L. And last cycle P&L was 258, give or take. So yeah, basically, bro, a lot of work going into this, but kind of like looking at, there is a lot of data and there's a lot of tickers, and so that's why I sort of organized it all in this presentable manner. But back to my estimates, they were a little bit on the, so to say, positive side. And if they didn't have such a bad year, from January 1st, they would probably meet the estimates, maybe even beat them in some cases. But because they're sitting on massive losses from the beginning of the year, that's why they were more conservative. And so what I'm going to do with the algorithm is figure out how to integrate this profit and loss into the algorithm, into the prediction of the next dividend. All right. So yeah, basically that's how we did. I would say the estimates were still quite accurate. Like for CONY myself, even before I created the algorithm, I was like, okay, CONY will definitely pay between 83 cents and $1. I'm telling you, that was my thought. And then once we fine-tuned the algorithm, it came up with 83 cents to $1.01. So I was like, spot on. And had it been a normal year, had we not had a massive drop, due to tariffs and all of that good stuff, they would pay, in my opinion, they would pay this range. They would pay around 90 cents. But because they have to make up for the losses from previous months, that's why they went more conservative. And I actually kind of like, yeah, this wasn't a bad move. You can see most of the misses were over here. 47%, 48% miss for NFLY. Again, it's not the miss on their part, it's my overestimation. And bro, if you look at NFLY last cycle, let's take a look at it. They made a lot of money. I think they made like $3 last cycle. Check this out. Yeah, $3. And so yeah, my estimate was quite high, $1.16 to $1.42. That's less than half of their income. But if you look at their P&L, no, they actually did all right this year. So I don't know why they didn't pay more. It's weird. Maybe they were just trying to kind of stay closer to the IV. The IV is like pretty horrible, and I think most of the money they made was on synthetic, because like IV estimate says 45 cents, and what they paid, NFLY paid significantly more than the IV estimate, but significantly less than the algorithm. Okay, so again, I will be fine tuning this, kind of integrate the rolling P&L, and I think this is a great feature. It's not really, if you just want to see like the prediction, P&L does not really give you much info. I think it's smart to sort of integrate it into the algorithm. I just gotta figure out at what ratios, because you can't just like slap 20% or take 20% out of the estimate. It's more complex than that. So I gotta figure out the correct way to do this. But if you're like, you want to do deep research, I think this is a great wealth of information. So normally I would have this P&L down below over here, because for most people it wouldn't be really interesting. I just put it up here for sort of presentation on YouTube type of mode, because scrolling down all the time, just like what's going on. Okay, now so guys, again, there was great enthusiasm in the comments, a lot of new subscribers. I welcome you to the channel, and very grateful for all the subscriptions, all the great comments. So people who are interested in this, now I haven't finalized exactly how this works, because I'm still working on the tracker itself. Okay, it's not finished. It's getting there. I still gotta fine tune the algorithm, but the product is just not 100%, not rollout ready. It's like I'm using it to show you, but it's not ready for public consumption, in my opinion. So some people were asking, how they can access it. So number one, on this page here, the YieldMax page that we have, so right now it has this dividend countdown clock, and so and where are we? Right here. And so we have the same clock over here. It's just like not as in your face, sort of tells you when the next group is paying, and that's group D, Misty. And by the way, I'm going to be, after this, I'm going to make sort of early Misty prediction video, because we can more or less draw the correct conclusions at this point at how much they might pay and what the cycle will look like. But basically, back to YieldMax page. So I will include the basic estimates on this page for the upcoming group, just the numbers. All right. And so on top of that, if somebody will want access to this tracker, okay, guys. So number one, I cannot make it free. Like the amount of time that was put into this, like it will be part of a premium subscription on the site. But so the current subscriptions are basically, there's one tier, and it's pro, monthly or yearly, and that in the future. So I want to integrate it with DripCalc, the main site, and the reason why DripCalc is important. So let's say you're mostly into YieldMax, but blindly buying YieldMax funds is kind of dangerous, so to say. Not dangerous, but like if I'm investing in it, I would like to know how the underlying stock. So in this table, you have the fund and you have the underlying stock. The stock they sell call options against. And so before investing, I want to know how that stock is doing and what to expect from it. And so on DripCalc, I've built what I think is a pretty amazing system that kind of gives you like a top level overview of how the underlying stock is doing, but also all this earnings information. And based on that, at least in my opinion, I can judge how well the company is doing. And so NVIDIA announced today they made $44 billion. And so the database should be updated tonight and or tomorrow. And so you will see that the next quarter will show up here, but you can see like the revenue, the top line, how much it's growing. So right here shows you 78% over the year over year. And so next quarter will be slightly smaller, but this tool allows people to research the underlying companies, not just the YieldMax fund, but like, let's say I want to invest in NVIDIA long term. And so if I think that NVIDIA, the underlying, will do poorly going forward, I'm not going to invest in NVIDIA because, I don't want to lose money. And so the main product of the site is this this earnings data. And you see like additional charts over here that compares revenue versus net income, or net income per share versus PE, or EPS and PE. So all these charts and all this additional information like revenue by segment, data center, all that good stuff. So that's how I research stocks. I always start here, okay? And so that's the main, the subscription on DripCalc gives you access to this stuff, okay? And now back to YieldMax Now, I will make sort of two levels of access on YieldMax Tracker. A basic access will give you some information, not all of this, if you are a subscriber on DripCalc. So if you have the current Pro version, once I finish YieldMax Tracker, and you're a subscriber to the current Pro version, you will get some access, but not all of this, okay? So to get the full access, it will be a separate tier. I don't know what I'm going to call it, doesn't matter, but it will be a separate tier. So like subscribing to a current version on DripCalc will not give you full access to this tool, right? It's just, but I'm still thinking like what kind of info to include. So that's a fluid situation. It's a work in progress. Yeah. So, and I still got to finish the product. It's not prime time ready. It's not integrated. This is just like a preview. So, bro, yeah, I've been hard at work. I've been doing like this rolling P&L, and so I haven't had time to answer the questions on YouTube. I barely have time to record these videos. It's now like almost 11 at night, and I'm recording the video now because I just wanted to get it out. But yeah, once I kind of figure out exactly how we're gonna do the YieldMax tracker, I will let you know. Again, subscribers to the Pro version of DripCalc, they'll get basic access to YieldMax tracker, and they will have an additional tier for full access. Okay, so that's the basic idea. By the way, if you want to have this information but you don't want to pay, right? There are people who like can't afford it or whatever. We have this YouTube YieldMax archive. So if you go to the main website dripcalc.com, and you over here under SCHD, there's a menu, DripCalc YieldMax archive. You can basically like download all these files yourself, and just like Rod does it, you can compile it in the Excel and get the data. And this exports, now this is actually happening at 6:30, because what I found out, 5:30 exports were super incomplete, and so 6:30 exports are pretty much, the finalized version. But just in case, I do the second download at 11 p.m. and that usually, barring the situation when YieldMax doesn't really, drops the ball and either doesn't update on time, or makes an incomplete update, or is missing some information. But it is what it is. We have an 11 p.m. download, sort of second download, that is more complete and more up to date, and usually it's finalized. But yeah, so like the all this information is basically over here. So you can download today's trades and run your own numbers, and you can download today's holdings, run your own numbers. So, but if you want ease of use and like kind of everything presented in a nice, compact way, bro, this is the tool. But I mean, I hope you understand, like, it can't be free. So yeah, with that said, bro, thanks for watching. Again, I really appreciate all the views on the previous video, and all the subscriptions, and all the likes, comments. So keep up the good work, guys. Subscribe to the channel if you are not subscribed yet. I'll be making a lot more of these videos. I'll keep you up on the progress of the YieldMax tracker, and we will be doing some estimates on weekly basis, and the most popular funds like Misty, I'm gonna do right now. And yeah, so I'll see you in a video very soon. Bye.